Hey guys, welcome to the episode of my mini series. So today we're going to be going over the VFS backside, but most importantly, like the spread trade which I took. And also joining me this time, I got Joe Freya, who's a trader at SMB, and just going to go over our thoughts on why it was an actionable trade and some of the nuances, and do a little bit of explaining like how SPACs work and stuff. So let's just get to it. So I'm sure everyone already knows though, but VinFast was a D-SPAC. It's a Vietnamese EV startup, and its ownership is very concentrated, 99%. And the only other real like similar comparison which I have is Polestar, another EV, and also very concentrated ownership. But the main difference with Polestar to VinFast is that there was a lot more shares, and it wasn't such a low float. But you can just get the idea. It's trading way below D-SPAC, blah blah blah. And so here's like the share structure for VinFast. So usually it's not like this obvious with SPACs, but with these guys they like just put it out so you could easily tell. So because I think it was a 20F or something they filed, and you can just see so 1.3 million shares, and now that's the float. And the other key thing to note was 8.4 million warrants. Now because obviously with SPACs, the float of the pre-SPAC the float of the SPAC goes onto the D-SPAC. And so before it was 1.3 million, and that will stay the same unless warrants get exercised, pipe guys sell shares, or lockup expiry comes around and those guys sell shares. Now, usually what happens is they'll have to file an S1 or F1 post-merger. I kind of go more into detail of this stuff in my other video if anyone wants to check it out. And that's like 98% of the time. So just keep that in mind. And the shares, like, they'll be locked up for 6+ months. This is just a norm. And some exceptions will be like better, which I'm sure everyone's aware of 2 weeks ago. And so yeah, basically the float of 1.3 million should stay the same. And the only other nuance which I found was in their 20th, they announced that 2.9 million shares were free from lockup expiry. Now back then I always thought this was a possibility, but now that they just this last week they filed an S1 or an F1, it looks like they tried to register it. So I don't think any of those shares were able to sell in the market, but it's very hard to know. I tried emailing IR and they never go back to me. But just for our sake, let's just assume the float was always 1.3 million. Now, first, I mean, obviously it had that squeeze. First of all, I'm not going to go really into detail on why I thought it happened or why it did happen because I just don't really know and I didn't really trade it at all. But key things, there were super negative press all around. Barons, they were putting out negative pieces almost daily, it seemed. Everyone was touting it as a clearly overvalued stock. And big thing, but it just continuously did a lot of volume and the float was small. And I'll show you some other examples of some D-SPACs that had big moves. IonQ, also low floater. I mean, just turning a lot of volume every day. Big move. PGY, another one. Getty, another one. And there's some more. These are like the ones that kind of held up, which I thought were kind of similar examples. But you can see they also, eventually always just unwound and came back down, right? And then here's the VinFast chart. Can't see the SPAC chart before. It's just not loading on my chart, but you can see it was just doing a ton of volume every day and then had this big move. And, for us, at least I'll speak for Joe and myself, for us to take a short setup on like a low float, we're not the best, I'd say, discretionary traders, so we kind of like need a catalyst. And the options edition was just that. And so I'll just go back. So they added options on this day here. And so we found this just to be a topping catalyst for many other setups. And I think that's the key, a topping catalyst. Because when I show you some other dailies, you'll see most of the time they'll die that same day, whereas VinFast really didn't. And Joe will speak more about that. And that's really for both like regular stocks and D-SPACs. And I mean, I have to assume it could be for a couple different reasons, right? Market makers, they can now hedge. I know with a lot of the non-D-SPAC, like the small cap runners, what happens is, all these retail that are buying equity, and then now just start buying juice premiums versus equity, and that just kind of like kills a lot of the momentum. And obviously, like large players, like the R funds, which are aware of the warrants accessibility, the spread trade we're going to go over later, or just anyone in general, they can now like take positions without having that like HKD type of risk. They can buy calls or whatever. So just for a lot of reasons, like adding options just takes away a lot of the momentum into the equity. And so here are some other chart examples. So these are all SPACs. DCFC added that day. PGY added that day, just where the arrows are. Uh, RDBX that day here. Forge that day here. And then here's one non-SPAC, BBIG, that day there. Another example you'll see, or what happens a lot with small canvases, they won't necessarily add options, but they'll add like weeklies or a bunch of different strikes. So CEI, for example, that was one. I don't have that chart, but you get the idea. And I think now I'll let Joe go over like the backside short trade.
Hey, what's up, guys? So I think so. Go to the next slide, Igor. So I think what's important to remember for us, like Igor was mentioning, is this is a topping catalyst for us more than anything. And so I think this was a good example of how things like, you know, when you have such a small float turning a lot of volume and there's a lot of eyes on this and options get added, how something could likely trade. So it gaps up on this day and it begins to kind of fail where that number one is. We thought it made sense to put some short on, but it's still in trend. It hasn't broken a prior day low or got under a prior day's close. So, we still want it to be pretty small in something like that. And then what happens is we open up and it nearly instantly goes into a limit down. And I think with a name that's so short crowded like this, that literally just moved 10 points literally within the first minute. That's going to get so many shorts in something like this. And then when it fails to go into a limit down, tries to make a new high, and then you have the first 5 minutes in a 10-point range that is still in trend. I think that becomes a very difficult trade, and I think the reason is because it's doing so much volume, but it's not breaking down. And it's very unlikely, I think, in this case, that we should be expecting that you can get like a really tight risk spot on like momentum. So at that point, we recognize that, and then around three, it gets tight below like VWAP, tries to sit up very higher, fails, and then just keeps holding higher and higher and higher. And you can just see within 5 minutes, tries to make a new high again, fails again, keeps holding higher and just higher and just building up higher lows. And then it has a squeeze out over highs. And I think the reason why this made a lot of sense to us was because shorts didn't have any real reason to get out yet. Their stop was probably at the first high or the pre-market high. So that clear out made a lot of sense. And so I think for us, even though we know this is likely a topping day, we don't really want to be shorting this on like the front side when it's still in trend, and the risk is really, really wide on something like this. And then what happens is it fails to make highs, and then holds lower, and then at that point, we're about 3 hours into the open and now starting to hold below like VWAP. I think as that continues to sort of hold, it's not something that you know again, it's still within its trend and there's no change of character yet. But I think knowing that this is likely a topping day, it's a good place to begin to put on a position to the high. When it closes below VWAP, it's off, 10 points off of like the high, and you have all those historical examples of, that tends to be the topping day. So we kind of thought that's how we, should have been managing a trade like that. Any thoughts on that, Igor?
No, I agree.
All right, and then the next day we gap down,
So here's just
and
really quick, you can see how clean of an uptrend this was the whole time, and that whole prior day, just never really, broke that at all. I think this is on a technical level, it's one of the cleanest charts you can get.
so the next day I think was super important. So we gap down and we begin to fail at 76 early in the pre-market. So we're failing in the pre-market, and we fail the prior day support, which is now, we think, a very clear moment where you can begin to scale that short position versus the prior day VWAP or the prior day close, and you can really trust that prior day high at that point. Now, I think what was tricky was, if you were trading equity here, you were risking like 10, 15 points. Now, when you begin to scale that, like, changes, but looking back at the other examples, I think it's important for us to know that you're likely going to have pretty wide stops on something like this. So even though it looks like you're risking a lot, when the trade does begin to work and you can really scale that trade, it becomes a great position to like be in. Also to note, SSR was turned on. So off the open, we push higher and fail, and we immediately begin to make new lows on big volume. And you can see how much easier from this day to the prior day that we were able to hold lows even as we were breaking down. The prior day, it was extremely difficult for us to be doing that. So after you get the failure early on, and then the failure again, even on SSR, we think that's a really big change of character there. And then we retrace back to VWAP, fail higher again, and begin to roll back over into new lows about 40 minutes into the open. When that makes new lows, I think that's a part where we should be really scaling versus the intraday highs and maybe a bit wider. And I think the reason why I think you got to be a bit slower there is because this has so much room lower that when you get that change of character and you can really trust a stop, you are really in a big position to kind of hold a trade like this once the trend does begin to completely change. And this is the first time that it was actually failing at higher time frame support level, and like Igor was mentioning, the higher time frame trend as well. So I think that's also why the reason to hold was extremely good. And now you're in a really strong driver's seat. So the change of character for us was the trend break, how differently it was holding lows on volume, and even as SSR, it was consistently still making new like lows. So that's how we thought that next day was panning out to be a really good trade.
Yep.
For
Thanks,
us.
Joe. So now we're going to move on to the spread trade and the warrants exercisability. And I'm going to kind of explain this a bit. So like as I mentioned before in the beginning of the slides, usually for warrants to be exercisable, the shares that underlie them, that's like the important part, they need to be registered. And so usually they'll file an F1, S1, whatever. And I would say on average it probably takes like 2 or 3 months probably for that to happen. And with VFS it was different. And I failed to notice this early enough. And I think majority of the SPAC community, anyone that I spoke to as well, was like confused. And obviously that's going to lead to creating such a large spread. But I'll just show like in the F4 it says they'll be exercisable 30 days after the completion. So like that's okay. But I feel like you see that on most of these SPAC F4s. So like really to me that didn't seem much information. And then you'll see as well below they said that no event later than 15 business days, they're going to reasonable efforts to file and declare effective a registration statement. So to me, that was them saying they're going to file an S1 or F1 and get that effective before the warrants are exercisable. But one thing that I think we've been doing better recently, and this is something we've been doing honestly for not too long, was like as soon as we started seeing chatter, more people talking about it, we're like, okay, why don't we just go straight to the root to find out? And so in this case, emailed IR and as well the transfer agent. And as soon as they confirmed it to me, I think the transfer agent was the most interesting one because I don't know, who knows if Carol at VFS will even know what she's talking about. But when he kind of confirmed, it was like, okay, these warrants are, I'd say 90% chance going to be exercisable on the Monday. And I'll just talk a little bit about like the context of the spread trade. So if you guys don't know, usually warrants are for SPACs are exercisable at 11.50. So say VFS is at $20 and the warrants are exercisable, they'll trade at 20 minus 11.50. So they should trade at 8.50 because that's like the intrinsic value, right? Now a lot of the time with SPACs and all these runners, you'll see like a large spread. I'm talking like ISPO for example. Went to 100, but the warrants only went up to 5. And so you could be wondering why was it not at 88.5? Well, that's because they weren't exercisable. And so the warrants do a really good job of pricing in the future, like where, not really where, but like knowing that, by the time these warrants are exercisable, ISPO is going to be way lower, right? And so, by the time, for example, in this situation, ISPO was, the warrants were exercisable, ISPO was back under 1150, So at that point, the warrant's intrinsic value is 0, right? And other examples that you guys would be aware of was like DWAC when it went to like 180 or whatever, and the warrants went up to 30. I think or I can't remember exactly what it went up to. Let me see. Like it went up to like 70s, like so you're telling me when the warrants are at 70, like in a couple months, DWAC's still going to be holding above 80s? Very unlikely, and that's why like a lot of these warrants, when they fail, that's it. They'll never go higher. But either way, now that like we kind of knew, or like we're pretty confident that the warrants are excisable, it was like game one to start thinking about putting on the spread trade. And so here's just a chart. So this is not VFS chart. This is the spread trade. So you can see at its highest it was like around 70. But most importantly, like for us, when the trade that made the most sense was like here, and that was like when it was around 10. Now, this is one way you could have played it. I did not do this. I didn't figure out the warrants thing in time. But for example, you could have bought the 40 puts for $11. This is just on the topping day, but you could have done this any of the other days as well. A lot of these puts were like mispriced along with the warrants. So you could have bought the 40 puts for $11, so that gives you a 29 cost basis. And the warrants were trading on that day at 366, so around a 15.1 cost basis for them. And so the spread between 29 minus 15 is 14. So you just have to hold it for like two weeks or 2 or 3 weeks until the warrants become exercisable. And basically risk-free. I don't want to say it was completely risk-free because you just never know, but that's one way you definitely could have played it. And going back in time, if I could have, this is probably the best trade you could have done on this whole name. I'd say the whole way up and down. Now, 1 week out, this is like the trade we mainly took. The spread opened on the Tuesday because Monday was a holiday. It opened at 10.27, and the bar rate was 900%. Now, similar thing that I saw with AMC, a lot of people didn't want to take the trade at all or be in this name short because of the bar rate. The key thing to know is you're only paying that bar rate for a couple of days. It's not like you're going to pay it for a month and be stuck for a month, right? If you know it's only 1 week or a couple of days till the spread closes, like, okay, you can do the math. So at whatever price it opened on Tuesday, it would have been around 64 cents a day, so $3.2. So you're still going to pocket, $7 net overall by being short VFS and long the warrants into the exercisability day. And I think the key thing is to mention is it does get to a point where the spread will close. Like one of these days, whether it gaps down a ton or it gets sold a ton, I'll show you like in the next slide, that spread will close, right? And the other thing to mention is, just like with APE and AMC, I think I don't know what to say, but for example, the warrants with AMC, but in this case, the warrants with VFS, but in this case, APE with AMC, like APE does a really good job of pricing in the future and where the underlying shares will be at when the spread closes. So you saw how like APE was just holding like low twos the whole time, and eventually AMC came down. Kind of same thing with the warrants. On that Tuesday they opened at 579. So to me, I was thinking, okay, it's a much higher chance that VFS comes down because that's also, by experience, I know that's what happens with these SPACs. Could expect VFS to be down at 16, 17 bucks by the end of the week. And so that's just like what the main reason that made me believe that one of these days, apart from just putting on the basic spread trade, you're going to get a day where this just has like a full trend down and another way you can play it. And here's just like, this is just from my other video. If anyone didn't watch that, you can go check that out. But you have, just these 2 days here, and that's kind of what I was envisioning was going to happen with VFS. Now, really quickly before Joe goes over the chart, this is not the same kind of risk-free as doing that puts trade because you never know what could happen, and there's still time until the spread closes, and you also have no 100% guarantee that those warrants are going to be exercisable. So, for example, on Tuesday, I don't have the chart, but the spread opened at like $10 and it actually widened to 12, but the warrants did not go up the same amount as the commons did. So, I mean, you never know what could happen. So say like if VFS decided to squeeze to 50, the warrants likely would, I'd say 99% chance would not go to 38. So you would, if you're, overly positioned and it starts going against you, like you have to keep that in mind. So I think if you're going to put on this trade, just know that what you want to do is you don't want to get stopped out before Friday or Monday, and you just have to deal with the first couple of days, because as time goes on, the spread will tighten and the warrants will trade at a more similar price movement, but in the beginning it won't. And so like I said, so with such a small float and the bar is high, if you have one big player, let's say one guy is doing this whole trade and he starts getting bought in for failure to deliver, he'll just take VFS up, and likely the warrants will not go up that much at all. And then the other way to play it is just the VFS intraday shorts, which I mentioned. So for example, for myself, Joe will show you later. I was doing this most days, but then specifically on Thursday, shorting at 4 a.m. And here you go, Joe, if you want to take over.
Yeah, so I think one of the most important things that you mentioned, Igor, is even though the spread is likely to close, what can happen from that day to the said day or until the closing day, there can be a lot happening, right? And we've seen that many times, and I've seen you go over them as well, even on those after hours days on AMC and 8, or even on any of the spread trades that we've seen the past month. I mean, we've seen some massive squeezes on like them. So I think what's important for us is to make sure that there's very few decisions that you need to make, and I think that's why a lot of people just decide to put on puts and leave the trade be, because it's just a lot safer. But I think for us, if we're putting on any equity position, especially short in this case, we want to be making sure that we're looking for the price is kind of showing us that we are correct. So not only do we want to kind of understand what's going on, but also back that with a good trade setup as well. So going into this day, like Igor said, there was still a spread. So on that Tuesday, the spread was still over 10 points. So on the 5th, we began putting on a short position for a few reasons. One, the spread was still big enough to give us enough risk reward on this to be profitable. The stock is clearly doing a lot of volume, but as you can see, the range is starting to contract, as the days are going lower, and it's doing way more volume than like the obvious float. And there's a lot more room down on the higher time frame. So on this day, I think it was trading at 28 or 30, and if you see where it came from, this has clearly a lot of room down, past 20 into the like teens. And of course, it's always good to be in a strong position. So we were also thinking in real time. If we're shorting here, give it 3, 4, 5 days, and we could be in a spot where those warrants become exercisable and maybe get a really big unwind. So we were also thinking about that type of position as well in this case. So on that day, we started short in the pre-market, and we put on the entire bread trade. Now, I think it's important to recognize that you don't really have a strong trade setup for us. So we wanted to make sure that we were in a correct amount of risk. And so what happened was we ended up squeezing higher, but failing again at 30. So now you have 2 days failing at 30, and we kind of hold the entire day, but clearly this 26 area is kind of beginning to sort of hold. So as long as the spread is still big enough, we do think when this does break down that 26, just like the day 2 that we went over, that breakdown should be a fairly similar trade. And again, even at $26-$25, this still has 5, 6, 7 points down in our head. So that next day, where Igor put 1, we begin to break down, but we're trading super wide and super spready, and on not as much volume as that day at 2. And I wish we had the tape because it was super obvious, but we did end up adding because you really never sort of know, and it could have just kind of kept on failing. But what we ended up doing was we began to short, and we might have shorted too much. And I think the hard part is we knew we didn't really want to get stopped out above the high, and we knew we wanted to keep some versus 30. But when you begin to add a good amount and then it goes back green from the day and from the prior day close, we really don't want to really stick in that position. So anything we added on that day, we should just completely be out of, and then keep the rest versus 30. So we thought that was the best move there, and probably a mistake on our end, just kind of getting out of the position, because probably just didn't want to hold it back all the way to 30. But clearly there's a big change between that day and the day 2 breakdown that we showed earlier. And then what ended up happening on this day, again, the spread still around 10. We begin to fail 2 times at 26, and then we close week on like lows. At this point, I think we recognize that it's not a good idea to be completely out, and being that the spread again, it's still there, and now you have a breakdown on the chart. Held 26, failed. We close week, and on the higher time frame, we have a lot of room down. This is a really good position for us to start to consider back on that trade. But realistically, we should have still been in the trade from like prior.
Yeah, and one thing
Anything on your end?
yeah, so I'll mention. So on this day, putting on the short and long warrants trade, and then this day we were scaling in just short, so not buying the warrants because, like I said, we were thinking that one of these days, we were going to get that full day unwind. And I mean, the volume was decent, and it just, although it was spready, it did, give reasons to try it. So that's the only thing I'll mention. And the other thing is, obviously, Wednesday to Thursday overnight. I'm sure you guys know. That's when you pay 2 nights of overnight. Sorry, Joe, you can take over again.
Yeah. So that prior day, we closed below 26 and at new like lows, and the next day we began to gap down. And again, just like the breakdown of the day 2 of the options added, we think the same after that the reason that Igor just mentioned of the expensive borrow. So I know Igor, you were shorting early in that pre-market, and I think the really good thing about that is you can scale that trade. So you were probably risking a couple points at that point, but as it begins to work more and more in like your favor, right? You're just lowering your top at that point, adding more like shares, and then on the open when again the spread is still there, and you have a couple points to the party close, and it just broke down on the higher time frame, you can really scale if that day begins to fail. So off the open, we fail and hold lower. And again, just like we did on that other day, right? We fail on big volume, right? And 15 minutes into the open, it's super easy for this stock to be holding lower at that point. So for us, all we're thinking about is, if we can trust the intraday high, we want to be, scaling as much as we can, because again, even if we're shorting 22, 20, 21, or like 20, there's still a spread on this, right? And we're getting intraday confirmation on volume that this is starting to break down. So we are trading this in a very similar way as that prior day in terms of we put ourselves in a really good place in terms of just sort of positioning in, and then just kind of make the hold. Because again, I think a key thing with like this is if the spread was smaller or this was like coming into a lot of support on the higher time frame, I think that trade becomes a bit harder to sort of hold, especially when you get like in the money. But I think being that this was kind of the exact opposite of that, it made it super easy to hold a trade like this short on this day. So we hold that. So we hold that trade pretty much until the close. I think we might have covered a little bit, Igor, I think.
Yeah, covered a fifth.
Yeah, and then the next day was a Friday, and we squeezed a bit into the open. And I know Igor, you were mentioning that you have another day left of trading, and the spread is still like 2.5. So if that again fails again, on really big like volume, that's still a really good trade. Of course, you got to be careful getting in too early because you really don't want to ruin the position that we are already in. But that next day does kind of end up failing immediately off of the open on serious volume. So, I know Igor, you weren't around at the time, but I began to short even like more, and that trade to like the current day like high. And I think at this point, after we start to fail and we get to 18s and 17, I've seen a lot of people start to short this because the next day or the next day or the next week on that Monday was going to be the day that people wanted to be short with those warrants. But the spread was it even went negative on this day, and on the higher time frame, we kind of came into where we previously were. So to be really scaling a trade like that, I think is kind of a chase. So that's why I think we wanted to, be in a spot where we were in from prior. And if anything, we wanted to be covering on this there, right? Because the risk reward at this point is much favorable to kind of just get out of like the short. Um, and that was it. I mean, I think we covered everything on that day, and I think what was tricky for us was not only was this like a breakdown trade with like a spread, but we were also trying to figure out what to do like with the warrants, and also the next week we knew could be a big week with those with those exercise of like the like warrants. So it felt like we were kind of we were communicating a ton of should we hold a quarter, a half, should we just get completely out, and we just made the decision to kind of just be completely out mainly. And then that next day we really sold off, and we got completely flat that like day. And I think it was a good decision because we took this as a breakdown trade, and we can always just get right back in. And of course, now in hindsight, we can see, what can happen. Because clearly this didn't just go down to 10. So that was that. That was that for us. I think there were very similar traits that you can spot on this day that we shorted the big breakdown, and then that day two of the options added. Very similar chart, very similar way that they played out. And I think this was just a trade that we thought could have been a really good like trade that we didn't see many people take. So, yeah, that's about it.
Yeah, I
Anything
think
on your end, Igor?
yeah, I think the only thing I'll add is, even if you don't want to be involved in the spread trade and being long the warrants or playing with options, I think the key thing is just to, at least like look into the spread and have an idea of what it's at. Because, like I said, like the best day for me was just shorting it at 4 a.m. and then a bit more in the open. And that, with that being said, I didn't even have to really take into account any other factors. And I think it's just keeping in mind that, yeah, one of these days it's going to have an unwind day, or, very likely it will. And, opening here at 4 a.m., the spread, I think the Friday was like 6, so it was still like $6 to go with, 2 days. It's, almost seemed like it's too good to be true. And yeah, it ended up being really too good to be true. Or not to be true, but ended up being really good. Um, but yeah, that was that. And I think the other thing is that this showed us is like, it's really good, a really good idea to like, as soon as you have any doubts or you don't understand anything, like figure out as soon as possible. Because had I done that, 1 or 2 days before, and maybe I would have played this completely different, like for example with the puts, right? So yeah, that's it. Thanks for watching. Any questions, let me know. This is done in one take, so we might have missed something or said a few things a bit wrong. But yeah, thank you. Bye bye.